Welcome to The Explainer. So glad you're joining us today because we're going to tear down exactly how ICICI Bank built this absolute fortress of a market position in the Indian economy. We're talking massive profits, deep technological moats, and a strategy that's literally rewriting the playbook for modern banking. All right, let's just dive right in.
Now, you hear the phrase, too big to fail, tossed around in financial media all the time. But what does that actually mean for the broader economy or, your own investments? It's not just a catchy headline. It's a formal, highly monitored regulatory status. And honestly, it's the perfect place to start to really grasp the sheer gravity of ICICI Bank.
See, the Reserve Bank of India officially designates a select few institutions as DSIBs, that's domestic systemically important banks. ICICI Bank, right alongside HDFC Bank and SBI, holds this exact title. Basically, the RBI explicitly considers ICICI a foundational pillar of the Indian economy. Its survival is so critical that if it were to fail, it would cause widespread national disruption. I mean, that is the massive scale we're dealing with here.
So here's our roadmap for the explainer today. First, a stock market titan. Then, the Q1 FY27 showdown. Third, building the digital moat. Fourth, the customer 360 strategy. And finally, sustaining the edge.
All right, part one is Stock Market Titan, understanding ICICI's scale.
To really get ICICI's influence, we got to look at how index power is actually calculated. You might think a company's power in an index is just based on its total size, right? But it's actually based on free float market capitalization. That means the index only cares about the shares actively available for you and me to trade in the public market. It completely ignores shares locked up by promoters or the government.
And based on that free float calculation, ICICI Bank holds a massive weightage in the Nifty 50 index, usually fluctuating somewhere between 8.4 and 9%. At an 8.86% weightage, ICICI isn't just participating in the stock market, it practically dictates the daily performance of the entire Nifty 50. Literally, when ICICI moves, the Indian market moves with it.
Moving on to part two, the Q1 FY27 showdown, Goliath vs. Goliath.
So, in the first quarter of FY27, ICICI Bank posted a standalone net profit of 14,804.50 crore rupees. That's a mind-boggling number. It proves that ICICI's massive market scale is backed by extraordinary real-world cash generation. They actually grew this profit by nearly 16% year over year.
And when you compare that momentum against its biggest rival, the difference is pretty stark. ICICI Bank is compounding smoothly with that 15.9% year-over-year profit growth, while HDFC reported 5%. And look, this isn't just a one-off lucky quarter. ICICI boasts a 5-year profit growth of 24.51% and a phenomenal return on equity of around 16.25 to 17.27%. Now, to be fair to HDFC, they're still digesting their massive 2023 merger with HDFC Limited, but still, ICICI's long-term compounding engine is just impossible to ignore.
Breaking down the quarter a bit further, HDFC Bank actually did hold slightly better asset quality. They had a lower gross NPA ratio of 1.17% compared to ICICI's 1.38%. But ICICI completely dominated on the quality of its earnings. Their net interest margin, which, is the core measure of lending profitability, hit an industry-leading 4.36%. HDFC, meanwhile, slipped to a record low of 3.26% because of those elevated borrowing costs from their merger. Basically, ICICI's profit engine is running incredibly hot and incredibly clean.
Okay, Section 3, building the digital moat, architecting the ICICI stack.
Now let's talk about the why behind all these numbers. The bank explicitly states that their ICICI stack offers nearly 500 services covering almost all banking requirements in one single place. Launched back during the crazy disruptions of 2020, this wasn't just some routine app update. This was them laying down the foundation for an unassailable competitive advantage. They essentially built a platform where you could handle almost all your banking needs without ever having to step foot inside a physical branch.
And the sheer scale of its capabilities is just staggering. We're talking instant digital onboarding for accounts and fixed deposits, seamless UPI and easy pay integration, instant approvals for personal, home, and business loans. They even have API-led robo-advisory for investments and instant insurance protection. The absolute game changer here is that ICICI digitized the entire customer lifecycle. This translates to a massive cost advantage simply because it completely slashes the friction and overhead you'd normally associate with traditional banking.
Which brings us to Section 4, the Customer 360 strategy. One bank, one team.
Traditional banking is usually super product-centric.
Different departments work in silos, pushing hundreds of complex, overlapping products. But ICICI flipped the script completely with their one bank, one team approach. They shifted to being fiercely customer-centric. In fact, they really embraced the power of subtraction, aggressively slashing their product variants from around 1,000 down to just 600 just to kill the complexity. The goal isn't to just sell a product anymore, it's to provide a unified, holistic solution to the customer.
And to actually make that human strategy work at scale, they rely on their ICRM platform. It's a cloud-based enterprise marvel. Just imagine 100,000 users across 7,000 business centers, all tapping into a system that integrates over 50 internal databases. What that means in plain English is that whether you're calling on the phone, walking into a branch, or using the app, every single relationship manager has full real-time context of your entire financial life. That hyper-personalized approach, that is exactly how you deepen a 360-degree relationship and lock in serious customer loyalty.
Finally, Section 5, Sustaining the Edge, Stability in a Dynamic Market. Unsurprisingly, global rating agencies have definitely taken notice. Moody's recently reaffirmed ICICI's Bay3 rating. And why? Because of exactly what we've been talking about. Their credit strength is driven by a massive retail deposit franchise, specifically those low-cost current and savings accounts, or CASA. Because they've made banking so effortless with the ICICI Stack and Customer 360, everyday retail customers just park their money there. That gives the bank incredibly stable, low-cost funding, which beautifully pads their liquidity buffers against any unexpected market shocks.
So that leaves us with one final, pretty provocative thought to wrap up our explainer today. We've seen how brilliantly ICICI Bank used the chaos of 2020 to build out the ICICI Stack and cement their status as a tech-forward fortress. But, as we know, technology doesn't sleep. If their digital moats are this robust today, how will a traditional bank, one that already acts like a tech company, navigate the next massive technological shift when artificial intelligence completely redefines the sector tomorrow? It's a fascinating question to chew on as we watch this market titan continue to evolve. Thanks so much for joining me for this explainer, and keep learning.